Have you ever heard the saying, I live in the gross? As realtors, we're ranked by our GCI, our gross commission income. We compare production numbers, we celebrate volume, and we measure success by how big that top line number looks. But today, I want to talk about the net. Because if you pay taxes, and I assume you do, you're living more in the net than the gross. And that raises a few important questions. For example, how exactly are commissions taxed in Mexico? What structure determines how much of that income we actually keep? And are we actively optimizing that structure or just operating under whatever we were originally set up with? Today, I'm going to break down the structure first, and then I'll share 3 tips to increase your net income that not everyone knows about. Hola, I'm Diani Leal, real estate broker with eXp Realty and coach for realtors based out of Puerto Vallarta, Mexico. If you're a realtor in the region, I'm happy to provide you with helpful tips and resources to help you grow your business, generate more leads, and enhance your digital marketing strategy. But today, we're going to dive into your tax strategy. Quick disclaimer before we start, I am not a CPA or contador. I'm sharing what I've learned operating as a realtor in Mexico and as an entrepreneur in Latin America for 18 years. Always verify your specific situation with a tax professional. And of course, if you're interested in these kinds of tips and this kind of information, please make sure to subscribe. And stay tuned for more tips and resources on growing and running your real estate business. Okay, so let's zoom out for a minute and look at the structure. When you earn a commission in Mexico, you are interacting with 2 completely different taxes at the same time. Your IVA and your ISR. One is transactional and passes through you, and the other directly affects your income and your wealth. If you don't clearly understand the distinction between those 2, it's very difficult to make strategic decisions about your net income. And if you already do, feel free to skip ahead, as right now we're going to break down what the difference is between these 2 types of tax. So let's start with IVA. IVA is 16% fixed rate in Mexico. It's your value added tax or sales tax. It is not income tax. It is not your profit. For example, when you earn 100,000 peso commission, you invoice 100,000 plus the 16% IVA, which means your total invoice is 116,000 pesos. That additional 16% is added on top of your commission percentage and is typically paid by whoever's paying your commission. Oftentimes the seller of the property or the developer, for example. It's really not common that this would come out of your pocket. So you collect that IVA and you remit it to SAT. In practical terms, it is a pass-through tax. It affects your cash flow, but it is not what determines how wealthy you become, for example. However, it is worth mentioning that the IVA on your local business expenses that are registered with SAT through facturas or official invoices, the IVA part of those facturas is deductible against the IVA you pay on your commissions. Your ISR or ISR, on the other hand, stands for Impuesto sobre la Renta, tax on income. As an entrepreneur, your renta is your income. Your business profit is your income. And that is the number SAT recognizes as taxable. This is the number that determines your net income. So when we talk about tax strategy, what we're really talking about is how to legally reduce the amount of income that gets taxed or reduce the rate applied to that income. When you have a deductible business expense, for example, the base cost of the service before IVA reduces your taxable income for ISR purposes, not the IVA portion. So just keep this in mind, but in a minute, we'll review this a little bit more in detail. Okay, so let's talk about your tax regimen. This is actually a really important detail that sometimes is overlooked as a default setting when you first become a real estate agent and get your RFC or your tax ID number. But this is where structure becomes extremely important. Your Regimen Fiscal or tax regimen is the framework SAT assigns you. It determines how your ISR or income tax is calculated, whether you are taxed on gross income or net profit, whether deductions reduce your tax, and what rate structure applies to you. So if you are a realtor that is considered a persona física, or an individual, instead of an incorporated business entity, the two tax regimens that will be an option for you are 612, which is personas físicas con actividad empresarial, or 626, which is the Régimen Simplificado de Confianza, also known as RECICO. So for the rest of the video, I'm just going to refer to the Régimen de Personas Físicas con Actividad Empresarial as 612, because it's a little bit of a mouthful there, and the Régimen Simplificado de Confianza as RECICO. If you're not sure which one you have, check your Constancia de Situación Fiscal or your CSFA, or ask your accountant for that information. It will tell you what your regimen is. They're numbered, so 612 is going to be pretty clear, and 626 is RECICO. Another couple of terms that I want to go into that affect your tax structure is whether or not you're a persona física or persona moral. The difference between these two terms is, one, persona física, it's an individual that is a sole entity that operates their business as themselves, and then your company name is just your name. Conceptually, this is similar to a sole proprietor, single member structure in the United States, though it's not legally identical. Persona moral, on the other hand, is a corporate structure. It typically involves corporate ISR around 30%, dividend taxes around 10%, additional compliance requirements, and higher accounting costs. It is not automatically better, but it does become strategic at higher income levels. However, for most independent agents, persona física is really where you're going to want to at least start, unless you form a brokerage and have a bunch of employees, for example. So now let's dive into 3 tips for increasing your net commission income. So 1, not a lot of people know this, and I'm surprised about it. And maybe you do already know, but I want to share it with you that if you are an international citizen, like you also have citizenship in another country, like the United States or Canada, or even if you're a national citizen of Mexico and you still like to diversify some of your business expenses by buying US-based services, especially when it comes to digital marketing, this can sometimes be popular. The reason for me, I am American, and I also use a lot of services like RankIQ, Descript, ChatGPT, analytics tools, my website. And for the most part, I use a US credit card for those because US credit cards have a little bit more preferable interest rates than Mexican credit cards. So for me, it's going to be a better option to pay those services in American money, get the American subscription, use my American card, use my US address. So if you're a realtor who has any expenses that are international, and you've been bummed because you can't get a factura for them and you can write them off in the States. So I know the US requires you to pay income tax even when you're a fiscal resident of the other country. So double taxation is another issue, and we'll touch on it a little bit here. But in general, if you have any international expenses that you can't get an official factura for, these can still be deductible with SAT. So for example, I have a long list of these expenses for my digital marketing strategies. So I've gone through a couple different accountants in the time that I've been here, but I usually work something out with whatever accountant I'm working directly with. And we settle on a deadline. And it's usually after the month closes out, like the first 10 days of the month is what I'm doing right now. And taxes are typically due on the 17th of each month for the month prior to that month. So January taxes are due on February 17th, for example. So on February 10th, I share a Google Drive folder with my accountant that has all of my US-based expenses and even expenses in Mexico that I can't get a factura for. If these are deductible business expenses that qualify as business expenses, which all of these do, of course, then you can still register those expenses with SAT. As long as the invoice has your razón social, which is your full name if you're a persona física, for example, your address as registered with SAT, and your RFC. Now, the address doesn't necessarily need to have your whole address, but it should at least have your zip code. And try to include the whole thing if you can. So what you can do is you go in your settings and you can update your billing preferences. And if they don't have that option available, you simply write an email to contact whoever about your billing and you request to have your factura or your invoice for this international payment reflect these details. A lot of times I'll refer to your RFC as your VAT, value added tax, and that will be the category that you plug in your RFC. And then I just take the PDF, put it in a folder, and the accountant manually uploads those and registers those expenses with SAT. Those expenses are deductible against your ISR, but they are not deductible against your EVA. That's the main difference. Because the expenses were for companies abroad, the EVA itself doesn't exist. It's not deductible against your EVA, but it is deductible against your income. So if you have, for example, somebody that's doing a video for you and they say, I'm going to charge you an extra 16% to make you a factura, you can say, you know what, can you just make me a PDF invoice and put this information on it without the sales tax or EVA on it and not charge me that extra 16%, but you can still deduct that expense. So I hope that's a helpful tip. It's really worked well for me in chopping away at that tax bill. And it also helps me at the end of the year when I need to do my taxes for the United States. I already have all of those expenses very well documented. And of course, make sure to get all your regular facturas here for your local expenses. I know that goes without saying. I'm sure you're doing that. But everything can have a deductible component, from your clothes to buying bottles of wine, eating at restaurants, getting your gas. Just make sure to document and write off every single thing you can, especially if you're in that regimen, which is 612. And that brings us to our tip number 2. Check your Regimen Fiscal. If you can get into Fisica, and not everybody qualifies, there might be some details or barriers to overcome in qualifying for Fisica, and you can talk to your accountant and make it a long-term goal if you don't immediately qualify. But if you can, I highly recommend you do. And this is why. So when I first became a real estate agent here in Mexico, I was simply told when I signed up to form part of this brokerage that I should apply for 612. This was just part of the requirements that was handed to me by the administrator who was registering all the details of my registration as a real estate agent here in Mexico, including my AMPI membership, my immigration status, and of course my tax registration information. At this particular time, I was not a fiscal resident of Mexico, so I didn't have an RFC, although I was already a resident. So I went to SAT and I got my RFC. And I followed the instructions that they told me to follow and got 612, which is the regimen of personas físicas con actividad empresarial. Later, I found out that under 612, ISR is progressive and can reach up to 35% of tax on higher income levels. And let me tell you, when I had my first good month, the tax bill was startling. Even though I had been deducting expenses without income for almost a year at that point. And in Mexico, you can accumulate your deductions for up to 10 years in a row. I was told by the accountant. I don't know, you'll have to check that because I've been told a couple different things. But at that time, that's what the accountant told me, that your deductions can actually carry over year after year. So at that point, I thought I had a fair amount of deductions, and I did, but I was still struck with a pretty startling tax bill. So under this structure, the tax is calculated on your profit, meaning your income minus your deductible expenses. So I get to researching because I am like, this is too much tax. There's got to be something that I can do about this. And upon further investigation, I discover that the other tax regimen, the Regimen Simplificado de Confianza, or RECICO, the ISR is dramatically simplified. You just pay approximately 1 to 2.5% of your gross income, depending on your monthly income bracket, as long as your annual income remains under about 3.5 million pesos. Once it exceeds 3.5 million pesos, you might want to reconsider your strategy. But if you're in that realm of a commission-based income that's under 3.5 million pesos, RECICO is going to dramatically reduce your tax bill. However, your deductions against your income aren't quantified in the same way, and they don't carry as much weight as with 612 because the rate is already reduced and applied to your gross income. But you should still track and continue deducting these expenses, especially if you anticipate potentially exceeding the 3.5 million peso mark. You're going to want to make sure you have all of your expenses registered with SAT. And as you may know, these need to be done on a monthly basis. And either way, the difference alone between 612 and Reciclo can significantly change your net income. Tip number 3, you may already know this as well, but make sure you have a separate bank account for your business expenses. This is highly recommended. It's going to help protect you. It's going to help you keep your commission income totally separate from everything else. You don't need to necessarily put all your expenses. You have facturas for your expenses. That's how you monitor your expenses. It's just make sure your income comes in there. And if your accountant requests any sort of bank statements, only provide them with your business account bank statement. There is no need to provide them with every single account statement you have. Just provide them with that. That's the only thing you're monitoring. You're monitoring your business income and what's deductible against that income. And what's deductible against that income is this facturas that are uploaded to the cloud through SAT, the ones that you get at the store or online or anywhere nationally. And additionally, if you start doing the international facturas, those as well. That's the only information your accountant needs to also help you implement a strategy that's going to increase your net. So I want to add a little extra bonus tip for Americans because I'm American. So obviously knowing what the tax situation is for Americans is going to be a valuable piece of information for me. So as you may know, if you're an American living in Mexico and working as a real estate agent, you're of course required to pay income tax in the United States on all of your income that you earn in Mexico. And because of FATCA, the Foreign Account Tax Compliant Act, which was enacted in 2010, American taxpayers are required to report all foreign assets and foreign income. And that is why the bank will now ask you for your Social Security number and additional information. That bank is required to report that asset to the IRS. So it's safe to assume IRS has access to your Mexico banking and income information. So make sure to cross your T's and dot your I's. So the way it works, you claim all of your income in US dollars on your tax form as income, and I just call it Mexico real estate income. And then you get to deducting all of your expenses. So you can deduct these US expenses, you can deduct the Mexico expenses, you can even deduct the tax you've paid into SAT. But if you receive an income in one specific month of over $10,000, which of course is common for real estate agents as we operate on commissions and sometimes get bigger payouts one month and less the next month, then you will be required to fill out an additional form called an FBAR. It's just a reporting requirement. It doesn't necessarily indicate that you will be required to pay more tax. It's just a form that you need to fill out. And then at that point, you might want to consult a CPA that's familiar with international tax, especially for expatriates of the United States who live in Mexico. But one piece of good news is, and you may know this already, but there is something called the foreign income exclusion, which allows you to deduct approximately $130,000 in income from your taxes. So that's something also you're probably going to want to have an experienced CPA navigate for you to ensure to activate that deduction. And I wouldn't do it until you are sure you're going to do it every year after that. And to qualify for this, you have to prove that you've been in Mexico for 330 days of the year, which is significant. That only gives you about a 2-week vacation. But there's other things you can do, like the bona fide residency test, but I'm not really sure what that is. So I do recommend you consult with a tax professional about that. It's just good to know it's an option. And then when you get to that point, if you're exceeding that 130K USD tax deduction and 3.5 million pesos in commission for Reciclo, then you have what we call a happy problem, right? But you are at that point going to want to reevaluate your strategy. And if you're considering growing your business, it may be in your interest to incorporate or give yourself a salary or whatever makes sense. There's a lot of different strategies. I don't know exactly what would work in this context, but you might want to reevaluate your tax strategy at that point. All right, so let's come back to where we started. We are ranked by gross income, but wealth is built in your net income. If you don't know your regimen, if you don't understand how ISR is calculated, and if you're not reviewing your structure as your income grows, you are leaving money on the table. Understand EVA, understand ISR, understand your regimen. Revisit your structure as you scale, because you don't live in the gross, you live in what you keep. If you found this information helpful, please consider subscribing for more strategic insights into building and investing in your real estate business here in Mexico. And if you want to have a thoughtful conversation about the structure of your business, growth, or strategy, my contact information is below. See you in the next video. Bye.